Hey everybody, and welcome back to Exploring Temecula. Today we are going to be talking about the new loan limits for 2021. If you aren't familiar with our channel, we do everything Temecula. We talk about everything from the wineries, local events, the housing market. We also have a free home search down in the description, so check that out if you'd like. And if you like this video, please subscribe, and we'll go ahead and get into the video. So the reason I wanted to make this video is the loan limits do change from year to year, and recently we've seen that they do change pretty drastically. So in this video, I'm going to go over the FHA loan limits, the conventional loan limits, and we'll also briefly touch on jumbo loans and VA loans, even though those technically don't have limits, but we'll talk about that later. So first I'd like to talk about FHA loans. Now, FHA loans are basically loans that are backed by the federal government. So these loans tend to have a little bit more restrictions, property standards, you'll have to have mortgage insurance, things like that, but they're really good for people that do have a lower credit score. So something under 700, you'll typically have a better shot of being able to qualify for a FHA loan as opposed to a conventional loan. So the new loan limit for FHA loans is at $477,250. So that's actually up quite a bit. Just since 2019, that limit has been raised over $11,000. So it was $11,500 lower in 2019. So it's been raising with housing prices, but just keep in mind that this is still quite a bit lower than what you can get for a conventional loan because it's a federally backed loan. The federal government has their limits, and so it will be lower than conventional, but it's a great option for people who do have a lower credit score. Now next, moving on to conventional loans, also called conforming loans. These loans are just your standard loans given out by private lenders. Typically, you will need to have a 700 or higher credit score to qualify. You'll also need to be able to show and prove your debt to income ratio. They really like to go off of the numbers for these types of loans and make sure that your ability to pay back the loan is there. Now these loans do typically have lower interest rates, so that's a really nice perk, and they don't always require the mortgage insurance like FHA loans do. They have a couple other added benefits in there. And these loans have gone up quite a bit, pretty drastically. So the new loan limit for conventional loans is $548,250, which is up $37,000 just from last year. So that's why this is so important to know, guys, because these numbers can change drastically. If you were looking for a property in 2020 or 2019 and you just couldn't qualify, or you couldn't get the amount of money that you needed for the type of property you wanted, now in 2021, you very well could, because you have $37,000 more than you would have last year. So very important to know these numbers and keep them in mind when you are looking to purchase a home. So the next type of loan that I'd like to talk about is VA loans. These are loans that are given out to either active or retired service members. They are given out by private lenders, but they're backed by the Department of Veteran Affairs. So these loans in the past did somewhat have to conform to the loan limits. They didn't technically have their own limits, but they sort of took the loan limits placed on the conventional and FHA, and somewhere around that range was what you could qualify for with a VA loan. Anything above that limit, they would still give to you, but they wouldn't necessarily give them zero financing. So recently in 2019, there was a Blue Water Navy Vietnam Veterans Act that was passed. And basically this changed everything for the VA loans. Now you really can get a loan through the VA up as high as you want. They are really only looking at your debt to income ratio now and your ability to pay back the loan. If you want to know more information about VA loans, I highly recommend speaking to a specialist, a loan officer who can talk to you about all of the rules and requirements. But these loans are really great for service members. The zero down financing is just an amazing feature, an amazing added bonus here. And really, no matter what loan you choose, you should have plenty of options, because even if we're looking at that high, mid 500s on the conventional loans, the average home in Riverside County is $467,000. So there's plenty of homes out there that'll be within the limits in Riverside County at least. So the last type of loan that I would like to go over and just touch on really quickly is the jumbo loan. So this is a loan that you would get if you were trying to purchase a home that is above the loan limits for conventional and FHA loans. If you are looking for this type of loan, just keep in mind you are going to have a much larger down payment, and they are very strict with the requirements on your debt to income ratio. They'll also look at any of your assets or money in the bank. So just be prepared that these loans are very specialized. You'll want to get in contact with a loan officer near you and kind of go over your options, find the best place to get a loan like this. It's just something to keep in mind. You want to make sure that you're going to keep your costs as low as possible, interest rates as low as possible. And if you have a large down payment, that should be feasible, but you definitely want to take your time to do your research on this. All right, guys, so there you have it. That was our 4 different loan types that I really wanted to talk to you about today. Now, why is any of this important? Well, right now in Riverside County, the market is very, very competitive. Homes are selling for $10,000 to $15,000 over list price. They have multiple offers, so it's getting wild out there. So I really recommend trying to shop around, find the best loan for you, where you can put down the least amount of down payment. That way, if an appraisal doesn't come in, let's say you finally get your offer accepted, appraisal comes in and it's $10,000 lower than what you offered. Well, you want to have that money to put up so that you can pay the difference, because otherwise, if you're right at the cap and you put way too much down payment and now you have nothing left to be able to play with, you may not be able to get the house of your dreams. So really, the way the market is right now, do your homework on the loan. Try to put the lowest down payment. That way you can actually get the home you want. And find a good realtor. Everything right now is about crafting a really attractive offer, because when there's 20 other offers on the table, you want to make sure that yours stands out and that you're able to make it as attractive as possible. So definitely find a good real estate agent that knows how to do that and knows what to put into the contract to make you stand out above the rest. Well, there it is, guys, and I hope you enjoyed this video. I hope it was informative. As always, please like and subscribe if you enjoyed it, and I will see you next time on Exploring Temecula.